Morning, everybody. It's the 29th of July. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mate. All right.
Yeah, not bad, thank you. How are you?
All right. How's the medals going this morning?
No gold this morning. We got a silver in the canoe slalom, and we just got a bronze in the trap shooting. So I'm across it all
Nice.
today. Expert in all of these sports now.
Yeah. Well, I mean,
Loving it.
that's good. Yeah. I mean, what you gonna go in for in 4 years' time in Paris? Well, 3 years'
Uh,
time, actually.
I don't know. I'm a bit old for most of them now.
No, you're
But yeah,
not.
might be able to get away with a bit of trap shooting or something. Maybe a bit of dressage, maybe.
Yeah. I mean, that's like
Yeah,
easy.
I've never
Just
ridden a horse in my life, but I'm sure,
it can't be that hard, mate.
make it dance.
Yeah. Yeah. It just the horse does it. It's just the other guy just has to hold on, doesn't he?
Yeah, just get a good horse and just hold on.
Yeah. I don't see the sort of like sport in that, but um, I'm sure we're upsetting all the
I think it's
horse
amazing.
holder honours out there.
Yeah, Charlotte Desjardins is now the most decorated female Olympian of all time in GB. So must be doing
Fantastic.
something right. She's probably got another 5 Olympics left in her as well. She's my age, 36, and they can just keep going at that
I
sport. So
can. I remember. I won't be able to remember the names. Harvey Smith or something, was it?
maybe.
Yeah, he's like back in the day. He was like he could hold on to a horse really, really tightly. So yeah,
Doing him
I'm
a
sure
disjustice
it's
here. I'm sure it's much harder than it looks. Of course,
yeah.
it looks ridiculously hard. I don't know why he's saying that. It's mad. Anyway, let's get on to what's going on with markets. So we had the FOMC yesterday, and they're moving closer to when they can start reducing their massive support for the US economy, though the Federal Reserve Chairman Jerome Powell said that there is still some way to go. We're not there yet, was his quote, and we see ourselves as having some ground to cover to get there. So good news for the markets. That will be, seeing them, I would have thought, push higher, although I think the initial reaction was sort of fairly muted and probably one that was expected, maybe. Looking at what else is going on in the corporate world, we've got Robinhood set to IPO today. But that's expected to be at the lower end of the marketed range to raise 2.1 billion. Been a bit of a lackluster showing for one of the year's most highly anticipated listings. So we'll wait and see what happens today on that front. We've also got Amazon numbers out today, so obviously that will be pretty well watched. So we also had news from AstraZeneca. Their COVID-19 vaccine doesn't raise the risk of rare blood clotting disorders after the second dose, according to a study. So that'll be a bit of relief for them. Obviously, we've still got the coronavirus Delta variant ravaging various parts of the world. So yeah, it's certainly not over. In terms of earnings yesterday, Facebook were or set a cautious tone, and that sent the shares a bit lower after hours. So keen to see how they react on the open today. Asian markets in recovery mode last night. Hang Seng in particular enjoyed an impressive 3% rise after Chinese regulators sought to ease fears over the recent crackdown. There was also a rebound in Chinese stocks. And also companies that are linked to China quite heavily, like Baidu, JD.com, and Alibaba, all posting notable gains. So plenty going on. Now we can get stuck into some charts and have a look at how things have been impacted from a technical perspective. Steve, is there anywhere you want to lead this first up? Straight into
I could
indices.
start. Yeah, get straight into indices. Just as you mentioned, Hang Seng had a nice recovery yesterday. That formed a bullish engulfing candle on the daily chart. Let me just show you that one. That's a bullish engulfing candle. The big green candle engulfs the whole of the previous losses and candle. So that's a small positive that we can look at. Obviously, if we look at the overall formation, we were talking about this sort of head and shoulders like formation when we broke. Really, there wasn't really a neckline. The neckline was downward sloping, so wasn't really clean. But we felt like this would be a potential neckline, the 27,500. level. It broke down rather aggressively, got down to 24,700, and looks potentially that it could squeeze back up. So that's looking positive at the moment. Nikkei, not quite the same sort of thing going on, but we've got some momentum starting to sort of like turn positive here, although we are at the lower end of this range that has been going on since the start of the year from February highs. China 50, obviously this is the daddy, which I believe is the real one to look at, has reacted great off this supportive level here, 14,600 area, and again bullish engulfing, or almost a bullish engulfing candle, not quite, and we've had a bit of a setback this morning in China. And I looked at this for, what sort of rally have we had? It's been a sort of just a standard one. Could be setting up for an inverse head and shoulders. I think the risk is if we get above the 15,700, there is potential for a full-on recovery in this all the way back to 16,445. However, if you really sort of are going to be picky and look at the price action over the last few hours, setting up for a bit of a bearish flag formation. So I'd be a bit nervous if we did break below 15,267. However, if we get back above 15,400, I think that brings us 15,700 into earshot. Dow, again, we're seeing these like lower highs. I quite like them, obviously, because I'm a indice bear. I prefer trading indices when they're coming off, which hasn't been very much over the last, but we have had these little down spikes. I'm talking about on a short-term basis, hasn't been very much over the last few millenniums. Yeah, but we've seen a bit of indecision on today's, this last hour's price action. We've got above the Ichimoku cloud, bit of a doji forming. We've got about 7 minutes for that to go. Potential for maybe a small pullback. Now the Nasdaq is showing a shooting star. Again, that's a bit of a negative candle after 5 or 6 hours of positive price action with this reaction from the cloud support. S&Ps, we're all around sort of like quite big round numbers as well. We've got like 35,000 in Dow, 15,000 in Nasdaq, and with 4,400 in S&Ps. Again, a bit of a doji candle over the last hour. Nothing massive to look in. Really, I'd be looking at more of being a bit more concerned on the S&P if we've got a break of 4385, and obviously investors would be a bit happier if we managed to get above 4415. So that's the indices. Let's take a look at commodities. Oil has picked up a bit. We are still in a bit of a corrective phase on the longer term chart, medium term chart. We've had a really nice reaction on the 20th of July up, so it still looks like we're heading higher towards the 74.90 and 76.35 resistance levels. So looking pretty positive on the 4-hour chart. The Ichimoku cloud has provided some really decent support. We've spiked below it, but didn't manage to close below it. And we've had a bit of a crossover here. So that's a positive, looks pretty good for WTI crude oil. Gold, my God, the head challenge yesterday was selling gold, which everyone was shocked about, and everyone had to sit down and think, what's Steve doing? He's gone mad. But we're still, it was obviously after the Fed meeting, it was a little bit of, gold took a little bit of a flight higher after that. And we did get down to the 1792 level, just in front of support. And that's where I said 1790 really for me is the pivotal level. Above that, you want to be long, below it, you want to get short. And we've had a nice little move up to 1820. Next level of resistance really is 1825 before 1834 comes into play. So gold is looking pretty rosy this morning, and serves me right for ever doubting it. Quick look at crypto. Let's have a look at Bitcoin. What are you doing? You bad boy. 41,000 or 40,900 has proved once again this was my resistance level. Everyone's talking about 40,000 or 41,000. I'm talking about 40,904 exactly. So we hit there and we formed a bearish outside candle, so pretty negative, but we managed to sell off to just a mere 2,000 points, little drop in the ocean, and then we formed a bullish outside candle. So they're still quite supportive on the crypto front. As I've said, I'm still bearish on crypto, bearish on the whole lot because I'm bearish on Bitcoin, and that seems to lead the way, although we did get a little uptick in Ripple yesterday, which was highlighted by some of our viewers. But yeah, this is quite an extended move higher. 1, 2, 3, 4, 5, 6, 7, 8, 9 positive bars. Could we squeeze a 9th positive bar out of that? If we do, I always feel like that's a little bit toppy. There's a high here of 41,340, which was the 15th of June high. That would be interesting. Let's put a little line in there, because even if we break above the 4,904, there's still a little bit of resistance there, which was the high from back then. But yeah, I think it's because this move has been so aggressive, it means that it's not it's on shaky ground, but it doesn't mean to say it can't go higher. Again, for me, really needs to get a clear break and a close on the daily basis or a weekly basis above that 41,340 to take away my bearish view. What happened to Ripple yesterday? Because that tore, didn't it, when we were speaking? Yeah, looking finished today really positive. Above, didn't move much from where we talked about it yesterday, and price action went a bit sideways. We saw the rip, and price action went a bit sideways. But that it on its own is even sort of like quite positive. Bullish flag formation. What's the potential move higher on that? There we go. 81.42, 81.5 cents. That's the potential. But if we do get a break back below 69, then bets are off. But yeah, 75, a break above 75 would confirm that. That's
Nice.
me.
Thank you, Steve. Okay, dollar index yesterday. So off the back of the FOMC, it sank lower, and we appear to have broken out of this kind of ending wedge formation. So obviously, a big channel that we've broken out of, looking for higher prices, seem to have stalled at the resistance levels around about 93.02 to 93.19. Big resistance at 93.43 that we still need to overcome, and if we do, then we're going to complete a large double bottom pattern on the longer term charts. But in the short term, we've broken out of this mini wedge, and it looks like we are going to see a correction to the downside following this big move up that we've seen in the dollar index over the last couple of months or so. So just maybe a bit of a health check really on the move higher, looking at in terms of where we could move to on the downside following this break. We've got a number of Fibonacci levels to potentially target. Obviously, we've got the 38.2 as the first port of call. That comes in at 91.79. The level I'm really interested in really is the 50%, which isn't the best Fibonacci level, I don't think, but there's a bit of confluence there. So we've got these previous highs that were posted back in May, coming pretty much in line with this 50% level. So for me, that would be a nice sort of pullback area to consider maybe adding to longs, and maybe what we are building here is a bigger sort of bottom pattern potentially. If it does overshoot that, then we could see it down to this sort of territory between the 61.8 and the 78.6. Where that would be the kind of last chance really for the bulls to make their mind up on whether or not they are going to push the dollar index higher. If that doesn't materialize, then it may be a case that we see a continuation lower within the dominant long-term downtrend. So some interesting times ahead potentially for the dollar index. I would be not buying it for now. I think that ship has sailed. It's a case of looking to see where it sort of pulls back to on any sort of correction. So if you are looking for a speculative trade in the short term, then it's probably a case of looking to sell into any short-term rallies, expecting this dip lower, probably towards 91.36-ish as a starting point. So obviously this is having implications on euro dollar. I've been speaking for months about this potential head and shoulders top pattern. Not convinced that we saw a break. So it is still a potential head and shoulders top pattern. As you can see here, we formed this kind of ending wedge into what I expected to be the neckline of the head and shoulders, which never really materialized. Yes, we saw some closes below the neckline, but nothing impulsive. No real pickups in volume. So for me, that is not job done at this stage. Really, what we need to see now is a break of this 117.04 level, which, given the break of the wedge and how well we've seen the response and move up to, higher in recent days, is going to take quite a bit more work. So for now, looks like we're going to see a corrective bounce to the upside, and there's plenty of room for this to move on the upside. Got a Fibonacci table drawn on here. 38.2 comes in at 119.48. The 50% comes in at 1.2009. And then we've got obviously 61 and 78.6% levels. So realistically, it could rally into these sorts of levels and not kill the idea of there being a head and shoulders top pattern forming here. So be careful, if you are trading it. I think, again, like dollar index, we are going to see maybe a bit of froth come off the top there, and therefore trade opportunities would be really on the long side, I think, at the moment in the very short term. But more medium term, I still think there is a larger top pattern forming here. And in order to be proved wrong on that, really I need to see it above this 122.66 level. So yeah, short term looks like it could be a case of buying dips on euro dollar. Looking elsewhere, so let's look at cable. That's bust through an interesting level today. So again, this was another situation where it was all hinged upon what the dollar index was doing. It looked as though the dollar index was getting close to completing that double bottom pattern. We saw a reversal here on the upside, which has really not slowed down whatsoever. So we saw a break of this neckline of what I thought was a double top, but it's come roaring back. And now we're into this resistance level here at 139.10. We're above it. Obviously, we've got a long way to go in the trading session today, but we're also taking out this short-term downtrend. So a close above here, plenty of fresh air for this to move into to the upside. Maybe it's just going to prolong this sort of range, and that we're going to see more sideways action over the sort of short to medium term. But in the very short term, potentially some upside on offer if it closes above this level on the daily for a push back towards this resistance level up here around about 142.43. So yeah, keep your eyes peeled there. Aussie, this is probably my favorite on the bearish side of things because it has completed this head and shoulders top. Yes, we are seeing a bit of a bounce, and yes, we did see a bit of an uptick in volume yesterday, but I think any gains here are likely to be short-lived. They could rally as far as the neckline again, up at sort of 75.27, but I still think that represent opportunities to sell in the short term. I think there is counter trend opportunities on offer there on the upside if you providing you keep your stops quite tight. So yeah, that pretty much is the theme everywhere, in that we are seeing dollar weakness, and obviously that's driving everything in the opposite direction today to where it has been going. Personally, I feel these will be short-lived, but there will be opportunities to play the counter trend move on or the counter move on dollar index. But I don't think the full story's over yet in terms of the dollar potentially bottoming out. But as with all these things, they do take time to mature. That's it from me, Steve. Gun to the head trades from yesterday. If I close the sheet, hey, there wasn't much nice, good to speak of anyway on the gun to the head stuff. We had a stop out on dollar CAD. That was me. And Steve, you didn't get stopped out on gold, but
Nearly did.
you nearly did. But that 0.16 tick saving,
Yeah.
that 0.16R saving is all important in the grand scheme of things. Anything you fancy this morning?
Well, not really. So I'm going to have a look at. I just took a look at the Acuity dashboard, and the one that sort of like it seems to be highlighted is this this negativity we've seen on the news sentiment side of things for selling euro dollar over the last 12 days, 9 days, and today we've got 8% confidence. that in the within 9 days, 80% of the time we get a fall in prices, and we can sort of look at the chart here. The price action is the white line. It's got the red chevron there. News sentiment has remained subdued. So for me, that sort of like tells me there is, like you've just said, there is potential for fading this move, and so I'm going to look to do that. Why not? But how do we look at that from a technical level? Ideally, what you would do is you would look to sell maybe a break of the sort of this impulsive move higher that we've had. Obviously, we had this massive spike. If you take that out of it, this impulsive move higher, and we're sort of heading towards this decent resistance, coming in around about 118.80, currently trading 118.67. Yeah, let's fade this at current levels, and we can put the stop in about, that would just like need to take out those levels. And why don't we target a 4-to-1 risk reward, which will take us back down to here, 117.86. So stop in at 118.86, getting short here at 118.66.
Nice. Good luck. I'm going to take a look at gold. Just flicking through my charts on the hourly, and I had this line drawn in a few days back now, but looking at price this morning, so this was a level I thought, okay, if it gets up there, could be worth a sell on an intraday basis, and it's hit it pretty much bang on to the tick, and as a result formed a sort of bearish engulfing candle
Nice.
there over the last hour. So I am going to sell that now because I'm going to have some conviction in my skills as a technical analyst and think that that's going to hold. And I'm going to place a stop just above these highs back here on the left hand side that were posted on the 20th of July. So give myself a bit of space. 1825.7 is the stop. The entry is 1817.50, and I'm going to target and move down to these sort of lots of long wicks you can see on the candle. So so maybe back down to this kind of level, which is 1792.70. So looking for just a shade under 3R on that one today. So selling gold is my gun to the head trade today.
Nice. Good luck with it.
Thank you. So what's out today? Fair amount. We've got Amazon numbers, which I talked about. So that'll be the big one on the corporate side of things. On the macroeconomic side, at 1 p.m. we've got German CPI. So inflation numbers from Germany, that's expected to rise to 3.1% year on year. Then at 1:30, we've got two data points out from the US. We've got, first of all, the US GDP reading for the second quarter. Growth expected to be 8% quarter on quarter from 6.4%. And then we also have initial jobless claims at the same time. Claims expected to fall to 390,000 from 419,000. So keep an eye on the US dollar and the US indices around that time. Then at 3 p.m. We have the US pending home sales number expected to fall 1% month on month. So a fair amount to keep us interested in. We've also got some ECB minutes out today as well. So yeah, it could be an interesting day.
Yeah, I saw that some of the big sort of like, obviously the big firms are posting record third quarter profits, and I think just between three of them, can't remember which three it was, Facebook and I don't know, 41 billion in profit in the third quarter.
Wow, it's
So
not bad, is
it's
it?
just absolutely unbelievable. But obviously it's got to be true, but it's just incredible how these it's money goes to money.
It does. Just with regards to what was going on with China, obviously Steve, you talked about it at length on the index. So the nation's central bank injected cash, and the regulators convened in a virtual meeting attempted to ease the fears about the Beijing crackdown that we've seen in the private education industry. The sweeping crackdown of its technology and education sector has helped push emerging market shares to a 17-year relative low against the developed market peers. So in terms of relative performance of the Chinese markets compared to US, it's at a 17-year low. So maybe a mean reversion to be played on that at some point.
Oh, why not?
Worthwhile
Why
keeping
not
an eye on.
indeed?
Who knows? Anyway, that'll do from us today. We'll be back tomorrow morning. In the meantime, trade safe, everybody, and have a great day.
Cheers.
Bye bye.